Hello, everyone. How is everyone doing? Happy Monday morning. Happy busiest trading week of the summer. Got a lot going on this week, but let's tune in. We had McDonald's earnings this morning, too. Good morning, John. They're certainly putting up McDonald's earnings, which were a miss. A double whammy miss, although they've sold way more of the $5 meal deals than expected. So, what's that tell you? And people are cutting back. Good morning, Patrick. Good morning, Sterling. Good morning, Jacob. Good morning, Ted. Good morning, Royal Palms. Good morning, Richard. All right, we'll wait for some more people to filter in. Still can't get the streaming working on X, so I'm pretty much giving up on that too. Oh well, we'll see. We'll see. But what we got going on this week? Because it's a busy week. Not today. We got through some 3 and 6 month bill auctions, Dallas Fed Manufacturing Index. Really about it. Tomorrow, Red Book, home prices, consumer board, consumer confidence, JOLTS, job openings. But Monday, Tuesday are relatively quiet in terms of financial reports. Wednesday, we have the all important Fed and not the pause because they're not going to shock with a cut. But it's going to be all press conference on whether they telegraph a September cut or not. So then what do we have? We have jobless claims on Thursday, some ISM manufacturing numbers. And coming up with Friday, we have non-farm payrolls. First Friday of the month, first Friday of August. Also, you have the end of July, so you could have some window dressing and repositioning. So it's not as big as the quarterly one, but it can still, especially with this little sell-off, we can still have some repositioning going on. So a very busy week, and that's even before we get to earnings. Hello, Charles. In terms of, let's see the way markets are looking. Everything's sort of green this morning. There are a couple little red things popping up, but mostly green. Mega caps mostly green. Chips green. So green for the end of July. Groups. Let's do a quick refresh here. Consumer defensive is the only negative thing, and that's only by 0.01. So leading off the week, everything is positive. Fed watch has the pause still in July and the cut still in September. Back to neutral mode. Schiller PE back over 35. All right, we already talked about McDonald's was a miss this morning and trying to hold very critical support on the chart. After close, not much. Not much. It's going to be nothing that's really going to be market moving. Tomorrow we got SoFi, PayPal, Pfizer, British Petroleum before the opening. AMD, Microsoft, Starbucks after the close. Of course, the biggie is going to be Microsoft. Wednesday, I'm keeping an eye on Boeing and Kraft Heinz. Those are the big ones. But at Wednesday after close and after the Fed press conference, you got Meta and Qualcomm. So those are the big ones. And then Thursday, you got Moderna in the morning, ConocoPhillips. But the big day, big Thursday after close, Amazon, Apple, Intel. And then you have Coinbase. So Friday, you have the biggies for oil. Chevron, Exxon, Mobil. So you can see very, very, very busy earnings week. You got non-farm payrolls again on Friday. So there's not a day. I mean, really today's sort of boring, but starting to really tomorrow afternoon kicks it off. Kicks it off, and it does not ease up. Does not ease up. So, good morning, Anissa. All right. Where do we sit now? So, came back down. We did not trigger the wedge last week. Still not triggered. Closing pretty much at the rotation zone. Wedge still not triggered. Hitting the first target and just below that, not to the second target on that double. We still have the little 1 hour Nothing did to invalidate it. It's climbing up. It's confirmed. It's confirmed but not triggered. Still needs a close above 55.33.25 to officially trigger it. And would that invalidate? Now, the real question is, if that does trigger and gets to all three targets and manages to close back above 56.13, it invalidates the rest of the head and shoulders targets. That is over then after, if I said double before for the down move, I meant head and shoulders, but that would invalidate it. So this is a very interesting one to watch. Also, you have, it's against the rotation zone, even though you don't have a lot of separation. It's against the rotation zone, and you're against a very key resistance level. So that is key. Other than that, that's what I'm watching for on the bullish side. If we do close above that 55.33.25, and a more aggressive stop reduction on this would be about 55.60. And then the first official stop reduction is 55.83.25. 56.08 is the next key target. And that's right in front of that 62.5 level. So I keep an eye now on that. Now, if it rolls back down and we close back below, where is this? Let me flip this. Hold on. And we cannot move that up yet, but the invalidation point for the double would be on a close below about 54.68. Okay, that would invalidate the double bottom. Until that happens, roughly, and this is, remember, the stop's slightly different because there's no stop raise yet, slightly different than the retracements, but the key levels I'll be looking at is 55.08, about 54.96, and then 54.83 for the levels on the pullback. Good morning, Eric. Potential double top on weekly DXY converting the daily double bottom. If you could have a look, we'll take a look. Again, there's lots of mixed signals this week. Lots of this. We got just a lot of stuff going on this week, so it could be a very interesting trading week, and we do have some mixed signals. You can even see it in looking just at the S&P. We have a confirmed but not triggered double, and against a first target hit, head and shoulders. So again, the market's at more, and you see this a lot of times when the market's going through a bigger transition phase. You start getting mixed signals. Now, the flat horizontal head and shoulder for the NASDAQ, again, hit the first target. Did not close below the weekly rotation zone, so still in the weekly rotation zone, so we could still get that bounce here. And the 1 hour. This is not confirmed. So not confirmed nor triggered on the NASDAQ. Still going to be looking at these retracement harmonics. In order for it to trigger, it needs a close above 19.390.50 on at least a 1 hour basis. The key level I'm looking at support is about 19.2. If we drop about 19.2, I'm going back to the 50% harmonic in this prior key support level, about 19.142. And then very key on a closing basis is 19,073. To the upside, if the double does trigger, and it's getting extended on the right-hand side, so this pretty much has to trigger today. The aggressive stop raise would be 19.5. The regular stop raise is 19.615. The first target area is 19.737. The Dow has recovered with yesterday's, last week's bounce on Friday. The key is a close of about 41.065. It's in the rollover zone. Potential rollover zone, I should say, between the 50 and 62.5 harmonic. A close above 41.60065. 41.065. Targets are 41.267, 41.470 are the targets to the upside. Very key support coming in at 40,650. That's going to be your key support level. Russell really triple topping it here, but not a fantastic pattern. It won't be a double. It's gotten too sloppy, but again, if we start breaking below 2188, that's going to be pretty key on the Russell. And from the whole run up from the lows in April, the key support levels back at 2110. Morning, Heinrich. The VIX still elevated, trying to hold on to a little breakout level, but if it starts, we really have to start cannot talk on this Monday. 1650. We start accelerating back down below that. I'll be more focused on a continuing bounce play and looking at those doubles. The DAX is just a mess right now. The DAX is a mess. So I'm going to be watching if it closes below this best fit line, the upward sloping best fit line, and then follows through below 137 on a closing basis. That's really it. The key resistance is still at 18,661 on a closing basis. Notes, remember, it closed above the 62.5, pulled back to the prior breakout level with the rising rotation zone. So 111.25 is still the first target, and then potentially 112.17.5. The yield hitting the first target on the double and then rolling over with the gap down today. The gap down. So I'm watching to see about key support for the next couple days to see if we retest the bottom of this channel line. Right here, this would technically make a potential bigger double, but we'll have to see if we get any bounce. The only way that would trigger is a very hawkish Fed on Wednesday. Other than that, the next major target on a collapse and a close below this 62.5 would be the 4.017 level. We still have the steepening going on. Even with that pullback on Friday, you can see we're trying to make a higher set of lows. And we're back in this multi-top area. Still got to break above minus 0.07. That will really, if we start getting above there, it's a quick trip to zero. And remember, the double that was triggered all the way back last October, since it was triggered, is still in play, even with the extended sideways movement. Once it triggers, it does not matter how long it takes. Dollar index. You have the weekly confirmed but not triggered on the weekly basis double top. Confirmed but not triggered. And that corresponds, if you use, then these would be the targets. I'd use the right-hand side, would correspond with the 87.5. Now, remember, that has not triggered. It's had a couple weeks, and these were back in July that it confirmed, but did not get the follow-through on the weekly basis. Now, in the short term, you have the confirmed, and today it looks like it's going to trigger, possibly with the dollar index on a bounce play. Now, even if it bounced and went to all the targets, that technically does not invalidate this already confirmed double. It would need to follow through and close above 105.11 to invalidate it. So it could complete the little mini double and then still roll over without invalidating the non-triggered weekly. So keep that in mind. But we need to have that follow through with the close. Remember, we get a lot of reversals with the dollar, especially towards the European closing time. So it needs to still close above 104.05. Crude, here's another one. Slightly triggered the lower probability double, slightly against the rotation zone and the 200 right in front of it, and then just collapsed back down, taking that out. And remember, it closed 4 cents below the 62.5, so we should still have the magnet price lower. And with your forward projection harmonics, the magnet price is still roughly 74 bucks. 74 bucks. Natty gas does have a little mini potential double against the rotation zone still. That would be out of the way, it looks like, if it were to trigger. That's the only thing I'm watching for any bullish case. Other than that, the probabilities still have for lower and retest this 87.5 harmonic. Gold, we should still see, based off probabilities, a retest of this very broad-based low area based off the closing price from Thursday last week as it closed below 62.5. So back in consolidation with gold. Silver, not the first stop from the weekly double top, which triggered odd follow through with the trigger on the weekly basis. First close below the rotation zone since back in February on the weekly basis. So we could easily see the continued pullback with price action on silver. Also at the daily rotation zone right at the breakdown level. So any pop, I'd be watching about 29 is very, very key resistance. Copper might be trying to put in a mini double right here, but no, and that would only be for a little micro bounce play, but that's about it. Still, we've closed below that 62.5, so we could easily see copper return to the 75% harmonic, about 395, and then potentially all the way back down to 373. The yen, the yield, triple topping, still watching for the potential breakout on the 10-year yield and trying to hold the base at that 200. But there's not a great pattern set up yet on the yen. Keeping a close eye on this with the euro. Keeping a close eye on the euro for a potential breakdown play with the dollar at this point. Spiders, very key resistance this week is on any rally is 551.30 area. For the bull case, you need a follow through close above 554.77. Right now, pre-market trading 546. The gap fill on any weakness would be to 544.44. And then a very key magnet price is about 541.50. The Qs, the key, very key area I'm watching is about 472 to 473.60 is very key resistance. Right now, a slight gap up. For the gap fill would be a return to 462.97, so 463. Any thoughts of algorithmic trading? It works just fine. I know plenty of people who trade algorithms. I know plenty of people who trade algorithms and have everything just fully automated. Just make sure your testing is done in all market conditions. And don't have an algo of being a smaller player that overtrades. Nice upside of Mountain Time Mark just closed at 2. And right now I'm on Mountain Savings Time because Arizona doesn't change time, so markets still close at 1 for me because Arizona does not change time. So they close in November it closes at 2, and the rest of the year it closes at 1. So that's where we sit. Let's take a look. Tesla, you had a Morgan Stanley ridiculous upgrade, but hitting that first target. Still going to be watching for the rollover plays on here. So that's all that's going on. You still have a double in play there. NVIDIA, after hitting the first target on the double, any rallies are still technically rollover plays. Now, we could still try to get some window dressing end of month, but the only thing that would invalidate the final targets on that double, remember, there's also key gaps left behind, would be on a bounce close above 127.84. So that's where we sit. Mickey D's. Gotta sell more Happy Meals, but here's your miss on earnings, and here's what I'm talking about. Very key support. You lose this, The next major price area is back all the way to 228.50. So keep that in mind. If it breaks down with at least from a potential shorting area, the first stop reduction would be 236. Now, for structuring any put plays, this is where I'd use the 236 and 228 areas and structure options around that. So I'd probably be using the 235s and the 230s or the 225s. Why can't we access? I don't know why you can't access the vids in the description. I'll have to take a look at that. We can take a look at AMD. Lots of stuff has been broken recently, and I don't know why. AMD, who has earnings, AMD earnings tomorrow after the close right there. So your key on the closing basis was 119.34. Any bounce play, very major resistance is 160. I'd be looking on any bounce play personally. This is a chart that's breaking down. So I'd be looking at any bounce play. 154 is more so my key resistance. And if it gaps lower, your key level to watch is 119.34 because that shifts the probabilities. And that's also a pretty major support level. So those are the key levels to watch if we're looking to see where the harmonics could take us to a downside. Look at that. There you go. So intermediate level, 130.39. This is why it's always helpful. So I put down here. Now I'm going to look at price action. See that? Because I have a harmonic. Where's price action near here? Look at that. Very key prior double top. First harmonic. So now we have a cluster right there. So roughly right around the 130s is a cluster at a prior double top highs. And then look at the 62.5. You have the harmonic projection and the retracement 62.5. So 119s. So those would be my key levels to the downside. All right. Let's peek in on the S&P going in the open. You're welcome, Jacob. Little mini support going in the open. I'm keeping an eye now at this 5508. 5508. And if you can't have if you have a weak tick and you can't bounce off of there, then I'd be back to that 54.96 key next support. If the 5508 holds, the really strong resistance is 55.26 going into the open. With that, I'm going to wrap it up for now. I hope everyone has a wonderful trading week, and I shall talk to everyone later. Bye for now.